Hi, everyone. Welcome to the BAI Deep Dive on the latest trends in financial fraud prevention. My name is Holly Hughes, and I'm the Chief Marketing Officer at BAI. I have the pleasure of speaking with three financial services leaders today on this important topic. Jen Martin is Head of Enterprise Fraud Services at KeyBank. Kevin Sanchez is Senior Vice President of Digital Financial Crimes at US Bank. And we're also speaking with my colleague today, Karl Dahlgren, who's Managing Director of Research at BAI. Welcome, everyone. It's so great to be with you today. I'm looking forward to talking more about this topic. BAI regularly surveys both industry leaders as well as consumers on different financial services topics via our BAI Banking Outlook research program, including collecting data on fraud trends. So I think that would be a great place for us to start. And Karl, maybe you can kick us off. I thought it would be helpful for you to share what our latest research has revealed regarding the biggest increases in fraud.
Thanks, Holly. Thanks for having BAI's research line of business participate today. I'm happy to be here with Kevin and Jen. So our line of business has two forms of research. One is benchmarking. That's mainly where the top 50 banks in the US submit data, oftentimes at an account level to us, and we aggregate it and de-identify it. The second is BBO, or BAI Banking Outlook, which is what you referenced. And we go out to both bankers and consumers. And so the information that I'm going to be presenting here is mainly from the bankers and their replies to our market survey. And there's, we'll bucket fraud into two different buckets for our first, discussion here. And there's first party and third party, right? And third party is essentially where a fraudster takes over somebody else's identity. And the other one is first party, where they're under their own identity. And so when we went out to banks, the third party fraud tends to be the most significant. 44% of the banks indicated that third party fraud is the biggest issue. 31% said that it was both third party and first party equally. In terms of the third party, the types of different fraud, 72% said that it was phishing. So that seems to be the primary issue. And then sort of in a neck and neck is check fraud. And then right after that, debit card fraud at 62% and 61%. This past year also, there was some a stimulus check related type fraud. I think that was just specific to what was going on in the economy with all the government stimulus. And then in first party fraud, debit card and check fraud were essentially neck and neck again at 59% and 57%. And then there was some distant third and fourth, which is loan fraud and credit card. Opening credit cards and then defaulting. So it's that third party and phishing that stood out on top.
Great, thanks, Karl. Jen and Kevin, would love to know how this syncs up with what you're seeing at KeyBank and US Bank, and then just elsewhere in the industry. Jen, maybe we'll start with you on that.
Yeah, absolutely. Very consistent with what we're seeing, although somewhat of a migration also into additional first party fraud. What we know about the past few years, right, coming through the pandemic, when the pandemic first happened, there was kind of fraud related to medical equipment and different scams there that then migrated to a lot of the benefits fraud, whether it was PPP or unemployment insurance. And there was so much financial assistance in the ecosystem that attracted fraud, right? And in that we have thousands more entrants into the fraud space than we did back before those programs. And so when those programs ended, what we're seeing is now a pivot of that fraud activity into banks, as the fraudsters are likely, they're trained now, they've got social media to improve and accelerate that training. They're not going away, and now they're looking at the broader financial services industry to target next. So we've definitely seen kind of that pivot through the past 2 years, as kind of life in totality has changed over COVID. So has the fraud trends.
Yeah, it is amazing how quickly they will just go to the next thing and find the vulnerability and act on that. Kevin, anything else you would add there in terms of how this compares to what you're seeing at US Bank?
That's really interesting insight there, and I can speak more from what we're seeing in the digital space at the bank as well as across the industry. The broad fraud trends we continue to monitor, I would say, at the bank here, really I'd say cover account takeover through digital channels, which is a prevalent risk both before the pandemic, but also during and now kind of coming out of the pandemic as we've seen a much higher level and rate of digital adoption by our customers that inherently increases kind of the risk of these customers being victimized. Certainly, there's the component of new account origination fraud, which really is a culmination of identity theft, synthetic identity fraud, as well as first-party fraud. And you alluded to some of the statistics around customers onboarding and then failing to pay off some of the new account debt that they may have taken on through credit cards or other lending products. Excuse me. I just know in general that within the digital banking ecosystem, we're closely monitoring these areas, just again, giving the criticality to delivering a trusted and secure digital experience for customers while also keeping the bad actors out of the system. And I think that's why, a lot of the materials that we'll probably be covering here today are super critical to really kind of optimizing that digital experience that's seamless, that's comfortable, that's real time for our customers, and also minimizing the risk to those same customers.
Yeah, and Kevin, I know there's also been an increase in fraud tied to P2P transactions, and it's definitely caught the attention of the victims on the consumer side, and also getting some regulatory attention. Could you talk a little bit more about that space specifically, and what US Bank's approach has been to addressing this issue?
Yeah, absolutely. So it's interestingly, it's certainly not limited to financial services, and it's pervasive across all industries. But what we are keenly aware of is the proliferation in social engineering as a highly effective means for the fraudsters, right? As a very common and increasing fraud tactic. Social engineering, which is kind of at the core of what we see in a lot of the P2P fraud, it targets all of us by playing on our emotions, personalizing attack campaigns, and creating this sense of urgency that can really challenge our decision-making abilities. So what we believe is part of a sound risk mitigation strategy in this area really includes kind of three areas. First, it would be proactive customer communications, really to drive awareness. And we can do that in a number of different ways from a digital standpoint, right? Certainly there's the traditional email communication method. And then we are able to provide, digital security awareness campaigns, and we can do that through the mobile application, our online banking channels, certainly even in branch and through ATM channels as well, just to make sure that we have that prevalence across all of our interaction methods with our customers to ensure that it's visible and it's transparent to them. I think in line with proactive customer communications, there's also a really key component for customer education, right? So making available education materials and resources that help customers spot, identify red flags, empower them to ask questions. Is this legitimate? Is this really my bank reaching out to me? Do I need to make this payment to the utility company or some sort of tax body? Empower them to reconsider the situation, and then really inform and advise them and empower them to know where to go for support. I'm not sure about the credibility of this message that I received via email or this SMS message I received. How do I know if it's legitimately from my bank? What should I do? So giving them that type of education and that information available so that they can make the right next step when they experience this type of situation. And then I think the third part of it is really comes down to what banks can do internally. And that really, I think, involves an integrated fraud, identity, and authentication systems and processes that work together to identify unusual activity, unusual patterns, behavior, both in session, out of session, then making sure that there's a feedback loop to ensure that those systems, those processes can be continually optimized so that we can mitigate emerging fraud trends. So I think it's really those three kind of layered approach is what's key critical in this area.
Yeah, those are some great strategies, great examples. Thanks for sharing those, Kevin. Jen, anything KeyBank is doing different? Are you doing some similar things as what Kevin mentioned, or anything different that you all are doing?
Yes, yeah, definitely very similar, right? Where the fraudsters move fast in this space, especially in authentication, identity verification, right? So we're always looking at our tools at, what is effective? Is it still effective? Are the fraudsters starting to now, be able to thwart that defense, right? And we've seen that, like, the auto wallet questions used to be great, and then those answers became prevalent, and then it wasn't, and now we're really looking at one-time passcode as, is that really as effective as it used to be? Because clients and consumers will give those passcodes out anytime they're texted, right? We tell them not to, but they do, right? So like, we're always looking at that next generation of tool set to layer in that is that right balance, that it doesn't feel like more to the client, but it gives us more intel. I think some of the behavioral biometric solutions that are out there that looks at like how you're handling your device, is that pattern really human, or could it be a bad actor, right? Those intelligence points through data are becoming more and more available. And then I love the point about it's not just like one fraud strategy. It is looking at all the different tools together to watch for patterns and changes in patterns to protect our clients. Also, I would say education is key. I mean, we are all our first line of defense to not respond to that text, to not take that call, to not give away our information. And so often much of fraud is successful because fraudsters know with the right sense of urgency, with the right framing of a message, people will respond to it. I mean, they wouldn't do it if it didn't work. And so unfortunately, we all as a community, I think, are doing so great about that constant communication. Don't click on the link. Don't give out your credentials. Watch your accounts, set yourself up for alerts for bad activity, right? Just more and more that the consumer can protect themselves will help as well.
Thanks, Jen. Yeah, helpful to get those additional examples. And, Karl, this is something we also asked in our BAI Banking Outlook survey in terms of what are financial services organizations doing proactively, to protect customers and address this. And I think, maybe some of the things that Jen and Kevin have talked about, but what else did we see in the research in terms of how organizations are, some proactive measures that they're taking?
Well, I think the answers that we got when we went out and asked bankers validate exactly what Jen and Kevin are saying. So number one was additional employee training. So that's the number one tool in the tool set. Second is customer communication. And then third was investing in new technology. And fourth was revising policies and procedures. So oftentimes you think of these, how do you combat fraud? And mine first goes to the technology like AI and other things that can be used. But good old fashioned communication is at the top of the list. And not only is it used more, but the increase in use year over year of the top two, so employee training and customer communication, went up 25%. So the increase was much more than the other categories as well.
And I think the research also showed banks are increasing their use of multi-factor authentication to protect customers from these fraudulent attacks. And, Kevin, I know that that's an area that you really focus in. Can you talk about some of the newer methods of authentication in the digital channel and how those are helping to prevent fraud?
Yeah, certainly. Absolutely. Such a key critical area, right? And what's really fascinating is that a customer experience centric authentication strategy, I believe, is critical to delivering both a secure and an enjoyable digital experience. Customers have grown to expect that they're going to have a seamless login experience, on all of their applications, not just within banking, but on all of their applications and accounts. And so we need to be able to meet them and deliver against that expectation, but also ensure that we're leveraging authentication capabilities and technologies and processes that really ensure that we are interacting with our customer on the other side and not a fraudster. So the industry has come quite a long way, as Jen mentioned earlier, right, from relying on kind of some rudimentary user ID password combinations only or knowledge-based authentication. And so it's been amazing to see how the industry has incorporated multiple identity and authentication capabilities that can really integrate seamlessly into the digital experience. So not only can multi-factor authentication be offered to customers through the traditional kind of one-time passcodes that may be sent to a customer's trusted phone number or email address, we can now offer it via mobile application through a push notification. But then there's also an evolving trend, I think Jen spoke to this earlier, there's an evolving trend in the industry, not just in financial services, but even more broadly, to take some of the onus off of the customer and leverage more passive authentication capabilities that don't rely on the customer necessarily reciting back a code or entering a PIN into their device, right? And so that would be the use of biometrics as part of a step-up process, device intelligence, where we can pull the information, through certain vendor capabilities and machine learning capabilities. We can identify the customer's device specifically through that interaction. And then there's the behavioral biometrics, right, that leverage kind of the machine learned models and capabilities to really detect anomalous digital activity based on, as Jen mentioned earlier, right, how is the phone or the device being held? How do the keystrokes compare to the customer's prior sessions? So all of these new capabilities really help deliver that increasingly secure and seamless digital experience, again, that customers are expecting and that we are continuing to aim for so that we can keep them secure in that digital experience.
Some really great examples, Kevin. Thank you. Jen, and I know you had mentioned some of these things previously. Anything else that you would add as it relates to authentication? Certainly an important element of fraud prevention.
Yeah, it's really critical, right? At any point in time, like my role is to make sure that you are who you say you are, and you should be doing that transaction, right? And the more that we can get to that, authenticating you as you behind the scenes without you really having to provide that information, but we're gleaning those insights from the information that we have through tools and strategies that we use. That's really that seamless experience. The client shouldn't know, that they shouldn't be impacted by that process. But for the bad actors, it gives us also the ability to stop them immediately. And then they know that we know, right? And I think that serves both cases. We always want to talk about, the great client experience, and that's important. But there's also that communication out to the bad actor too, that, hey, we have these types of controls and we're watching, and I think it serves both.
Thanks, Jen. Yeah. So to close us out and kind of wrap this all together, we've talked about some of the trends, what you're seeing. We've talked about how you're proactively addressing it and what the BAI research has shown. And we've touched on this balance of friction versus a great customer experience. And I think as BAI covers this topic, that continues to be, a challenge. And you've mentioned some interesting ways to not put so much pressure, Kevin, on the consumer, and how can you leverage technology. But we'd love to just kind of close out with that, because I know people listening are probably thinking, gosh, what is that balance? What is appropriate to protect the customers, protect the bank, but also not take too much away from the customer experience. So Jen, maybe we'll start with you in terms of how do you strike that right balance, and then Kevin, have you give some closing thoughts.
Yeah, and I will say that the temperament for this has really changed in the industry too. And we certainly see on the other side, if you don't have those right controls, or your identity theft is being used to open accounts, right, that creates as much concern for us as institutions as that process. So I think gone are the days that no friction is the expectation, right? Clients want to know and want to be part of that process and understand the controls so that they know like you have their back through that perspective in your institution, but then across the ecosystem, that my credentials aren't being used somewhere else to open accounts, right? That that friction helps, with protecting my identity. So I think, I think gone are the days where no friction was the model, right? But where we do layer it in, it has to be effective, right? And more and more of those effective tools are the silent ones that run behind the scenes, because the obvious can be easily thwarted. So collecting that data that kind of maybe binds you to your device, or uses that silent device data that incorporates other information about you, your IP location, your device information, and we're monitoring that on your behalf, I think is probably the most effective. But clients are also okay with a little amount of friction to know that that's us demonstrating, our security as well, and that we take this very seriously, and we want to make sure that we are transacting with the person.
Great perspectives. And yeah, if you're going to make me go through a couple of hoops, make it worth it and,
Right.
and truly protect me, and then leverage all this stuff that they know is out there. Kevin, anything else that you would add in terms of striking that balance and the expectations here?
Really agree with Jen's points there. I think maybe one other kind of ingredient to success that maybe we've seen here at US Bank is a strong internal collaboration and partnership across what may have historically been siloed areas of the bank, and not necessarily at US Bank alone. I've seen this across the industry, where you have your customer experience team, and maybe you have a marketing team, and you certainly have kind of a product ownership team, and then you have your fraud and or maybe risk and compliance folks, right? And what we've really seen is it's so incredibly empowering and productive and effective when those teams come together to address these types of situations. How do we inform and educate and make our customers aware of social engineering threats and risks? And how do we explain to them in their own terms about why we may need them to jump through a couple extra hoops every now and then on certain, higher risk transactions? How do we explain that to them so that we're transparent and we can communicate effectively? And so they get the peace of mind that, oh, my bank really is looking out for me. They really do want to make sure that this is me, performing this transaction. Now I understand it. Sure, that's not a problem. I'll do what's necessary. So I think by kind of bringing all of these different functions and teams together in a very collaborative way, we can deliver that seamless experience, but also making sure that we deliver upon, kind of the expectations that certainly regulators have, that we have of ourselves, to deliver secure and really protected, trusted digital experience.
A great point to end on, Kevin. Communication and certainly a theme throughout this conversation, but also that internal piece and connecting those dots and that collaboration, especially if you're remote or hybrid, sometimes that becomes challenging, but so valuable and has such a high impact. Thank you for that.
Yes, I agree to that
please.
point. I mean, I think, and I'm seeing that across our institutions. He's exactly right. We used to be so siloed across what product did and digital and then fraud. And now really, I think we're seeing that across the industry, that's now considered as a complete package to bring something new to market, right? You want to have all of those partners together in that design and solution. And that's, I think that is a true benefit to all the work that we're doing across the industry.
Definitely. Well, Jen, Kevin, Karl, thank you so much for sharing your insights on this important topic today. I think you've given folks, maybe there are things they're currently doing, but maybe it's taking it to the next level, connecting the dots, filling in the gaps. And also just really want to thank those of you who took the time to listen. Encourage you to share this video with other leaders who might find it valuable. And we'll be exploring fraud strategies and fraud prevention strategies in more detail with additional BAI deep dive content as part of this series. And as always, you can find more thought leadership and research on this topic and other key issues that financial services leaders are facing on our website, which is bai.org. Thanks again, everyone, and have a great day.
Thank you.